Hey there, it's Tim Pillsbury. Topic for this video is refinancing. By the end of this, you should have a good idea of what refinancing is and maybe have an idea if it's something that you should consider or not. A refinance, in simplest terms, means you take an existing loan that you have and you're replacing that existing loan with a new loan. There are different reasons to do this. Most common is that maybe with a new loan, you get better terms than you currently have with your existing loan. For example, say you owe $100,000 on your current loan, you get a new loan for $100,000, and that new loan pays off the current loan. That current loan is discharged. You no longer have to pay that company anymore. And it's been replaced by a new loan with better terms, hopefully cheaper terms that will save you money. That would be the most common reason to refinance, where people are able to get better terms on a newer loan compared to the current loan that they already have. There's other reasons that people might choose to refinance. For example, and this is common in divorce situations, is if there are people trying to come off an existing loan. So the person remaining on the loan would refinance that debt, pay off the existing one that someone else is also obligated on it. Once that loan is paid off, that person's obligation is released. They no longer have any part of it. It's been replaced by one remaining loan, and now you only have that one person left obligated on that loan. Here's another example. Say there's a family member who passes away and they leave their property to, say it's 3 heirs. Let's say one of the heirs wants the property, the 2 other heirs do not want the property, so that one heir can do a mortgage just in their name, and they can take the proceeds of that mortgage to buy out the ownership interest of the other 2 heirs, leaving them as the only one obligated on the mortgage and the only one with ownership interest to that property. Another reason someone might choose to refinance is if they're doing a cash out refinance, and that can be used for several different reasons. Most common would be if they're using it to do some sort of debt consolidation. So we use this for an example. Let's say someone owes $100,000 on their mortgage. Let's say they have $50,000 in consumer debt. They can get a new mortgage. Let's say they get it for $150,000. So that existing $100,000 debt is paid off. It's replaced with a new loan for $150,000. The excess $50,000 goes to the homeowner that they can then use to pay off that $50,000 in consumer debt. Now, the proceeds of a cash out refinance does not have to go to pay off consumer debt. I've seen people use it to do home renovations, repairs, expansions on their home. I've seen people take money out of their current home and use that to acquire other property. So there could be any number of reasons why someone would pull out cash from a cash out refinance. When looking at a refinance, there's a lot of things to consider. You're going to want to do a cost-benefit analysis where you look at the potential savings that you realize from getting better terms on the new loan. You're also going to want to look at what the cost is of getting that new loan, because there's going to be some charges, could be some lender charges, could be an appraisal charge. There's going to be some legal recording costs involved. So it's very important to figure out how much will it cost me to refinance and how much could I potentially save. Also, you need to factor in how long are you really going to live in the house. Let's say your family has a 2-year plan where you're intending to move after 2 years. If that's the case, you need to really look at the numbers and figure out, are we going to save enough every month with refinancing to make it worth the cost that we have to pay if we're only going to be saving this money for the next 2 years. If you know that you're going to be in your house for 5, 10, 20 years or longer, then definitely take that into consideration as well. If you're considering a cash out refinance, now that cost benefit analysis is a little bit different. On one hand, you're looking at raising the housing expense for your primary residence on your mortgage, but what if the money you get from doing that is used to pay off other consumer debt that's a lot more expensive? Or what if the proceeds that you get from doing a cash out refinance can be used to buy another property, an income producing property, so even though you're paying more for your housing expense here, you're getting more income over here. Now, not everything can have a cost benefit analysis. If you're trying to do a cash out refinance so you can build a pool, you can't really do a cash benefit analysis on that. It's either yes, we want a pool, or no, we don't want a pool. So what are the 2 most common questions I get about refinancing? Number 1 is, how long do I have to wait to refinance? Do I have to wait a year? And the answer to that is, in most cases, no, you don't have to wait a year. There's some loans where you might have prepayment penalties, although those aren't as common now as they once were. But there may be penalties or additional fees that you have to pay if that loan is paid off before a certain period of time. There's some other loans like a VA loan where you have to make 7 payments or wait 210 days from when you close on the first loan before you are eligible to refinance. So the answer to that is no. In most cases, you do not have to wait a year to refinance. You're going to want to either pull out your closing documents and see if there's any stipulations you have to follow, or better yet, contact your loan officer, let them know that you're interested in possibly refinancing, and they can let you know if there's any restrictions or timeframes that you have to adhere to. There are some rules about doing a cash out refinance and how long you have to wait before you are eligible to do a cash out refinance. So again, check with your loan officer. You're just going to want to make sure that you've met those timeline requirements if you are considering a cash out refinance. And the other misconception I hear from people is they think you should only refinance if you can save 1% in the interest rate. Now that's not true, and I'm going to illustrate why. Let's say someone has a loan, they owe $1 million on it. Let's say they can get a lower interest rate today, 0.5% lower than what they have. On $1 million loan, they could save between $300 and $350 a month. So that's pretty good. On the flip side, let's say someone owes $75,000 on their mortgage. Let's say they can get a 1% lower interest rate. That 1% lower interest rate saves them about $50 a month. So in those two examples, would you say the person that owes $75,000 saving 1% should refinance, and the person that owes $1 million and saving 0.5% should not refinance? Of course not. Every situation is a little bit different, so you have to look at your particular scenario and see if it makes sense. To help with that, I put a link to a refinance calculator down below. You can check that out. You can put in different scenarios, numbers, payments, interest rates, things like that, and figure out would it make sense to refinance now, or you can play with it and figure out what rate would it need to get to in order for it to make sense for me to refinance. And lastly, I think this is kind of an important takeaway. I've done videos on this before. If you have a mortgage, you're going to get solicited. You're going to get stuff in the mail all the time from companies wanting you to refinance, and sometimes they don't even call it a refinance. Sometimes they'll call it a debt consolidation or something similar to that. These companies sending you this, they don't know you. They don't know your scenario. They have not sent this to you because they looked at your situation and determined you would be a good candidate to save money. You are part of a list that they mass send these mailers out to, trying to get someone to call or go on the website or send an email inquiring about refinancing. They send them to everybody. I've personally got ones before where the letter says, I'm a candidate for a wonderful refinance opportunity to save all this money, and they do all the calculation, and it was going to be more expensive for me to do it. They don't care. They just send it to everybody, and hopefully someone will contact them. Your loan servicer will do the same thing. Now, your loan servicer is the company that you send your payments to every month. That servicer will send out solicitations. Whether or not it benefits you, they will try to get you to refinance. Is it in your best interest to do so? Maybe. But just remember, they're not sending it to you because they think it's in your best interest. They're sending it to you because they want you to reply. So if you get something like that in the mail and are wondering, is this something I should consider? Contact your loan officer. Tell them what you got. You can even snap a picture and send it to them. If you have a trusted loan advisor, they would be happy to help you out with that. If you don't, please let me know and I'll take a look at it for you. So again, thank you for watching. I hope this was helpful. If you have more specific scenarios or questions you want to cover, my contact information is below. Reach out and I'm happy to help. Thanks.